Welcome back to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So over the last couple days, it's definitely been pretty crazy around crypto. I just told you guys in yesterday's video that I do want to do a lot more market updates as we do get a little bit more price action across the board. And it's not just about, crypto, it's also stocks now, right? We have been focused on stocks heavily because, we now have big updates coming from this presidential admin that is affecting markets across the board. Now, with crypto right now, today, we are actually having a pretty decent day. The overall market cap is up about 3.27%. Bitcoin is up about 3.5%. XRP is up about 7.5% on the 24-hour span. And this is actually something that is happening across the board now. One thing that I've always said is just focus on these gains because these are not positive net gains. They are just bounces off of the lows, as you guys can see. I do think that we will see positive price action. We just have to kind of get through this storm. We have to weather this storm. Just like I said over on X, we're just kind of weathering the storm. And regardless of what happens next, in my opinion, it's all about focusing on the structure. So a lot of people said that yesterday's video is pretty bearish. It's mostly me being real with you guys. I'm not going to come on here and, just try to tell you guys that, oh, yeah, everything is fine, even though the entire market is burning down. We have to be real about the structure. Now, with that, I also did say something on X, and I still believe this right now, and I will continue to believe this while I believe that this market is extremely early. I said on X, okay, let me refresh this so that I can get rid of that promote ad. I said bull or bear, I will never be negative on the future of this space. We are sitting in a sub $3 trillion asset class with a total addressable market in the quadrillions of dollars. Money is going digital. Everything around us is moving towards digital and automated workflows. At the end of the day, AI needs blockchain and DLT. All of these sectors and industries will be running on digital rails powered by this tech. I will never be bearish on this tech when we haven't even scratched the surface for adoption and utilization of it. The future is extremely bright for this space. Even in the darkest times, I stay focused on this. And yes, this is something that I want you guys to understand right now. Most of the space, all of these prices that we see across the board, none of it matters. I've always said this, right? Like, if we look at XRP and its market cap is $127 billion, does this price even matter? No, because it's determined by Bitcoin. Everything in this space right now, considering the fact that Bitcoin's dominance is over 61%, this entire space moves with Bitcoin. Whatever Bitcoin does, this space follows. Let me ask you this. Does that sound like an accurate valuation for these projects like XRP? Does that sound like something that should be driving the value of XRP? Bitcoin? No. But that's exactly what's happening right now because we are still in a Bitcoin-driven cycle. This is why I still focus on the future of this space. I see all of the TradFi guys going all in on crypto. I see everything happening around this space in real time, and it just feels as if we are in that monumental moment for crypto where the actual value behind the tech is being realized. We just have to get through all of this nonsense. We have to get through the regulatory moves. We have to get through, the move of, these bills being created and drafted. And once we do get through all of that and we get through the, nonsense of these tariffs and stuff like that, because again, the tariffs are not nonsense. It's just that they are causing a lot of panic across the board. They're causing sell-offs across the board. Even, yesterday, earlier today, if you will, we did get an announcement from Trump saying that he's announcing additional 25% tariffs on steel and aluminum coming into the US from Canada. That's going to be happening tomorrow or today. This brings tariffs on these goods up to a high of 50%. Now, again, while we continue to see these tariffs being announced and, it's being pushed and pushed and pushed, this will definitely cause some, panic. I've said it many times over. But if we get through this, if we weather this storm, what happens on the other side of that storm is going to be extremely bullish. I've said this many times over in the past as well. If we made it through COVID, if we made it through, FTX and Luna, we can make it through anything. And we all know what happened every single time after. Right now, when we look at the structure, first off, structure-wise right now, it's actually looking pretty good. I'm going to talk about that here in a second. But we can't get too far ahead of ourselves. We can't get extremely bullish right now until we start to reclaim some previous highs. But XRP looks very good, up 6.6% on the 24-hour. On the 7-day, we're still down. On the 1 month, we're still down. And on the 1 year, we're still up over 200+%. This is what XRP's chart looks like right now. I am analyzing this in terms of some higher highs and also higher lows, right? What we really want to see here, and we could switch to the daily real quick just to kind of see what we're working with. What we want to see here on XRP is we don't want to see a loss of this low now. This is our significant liquidity wick that we are going off of because it's just slightly higher than the wick from February 2nd. We also kind of have a double bottom here now forming. We did lose the $2.07 zone that I did not want to see us lose. We did find support on the actual daily candle close around $2.01. So far, $2 has held up, which is very good. I would like for us to maintain these lows. So the next low here that we are looking for is just slightly higher than, our low that we just put in, earlier today, yesterday, if you will. And now what I'm looking for is for the entire market to kind of continue to bounce to the upside. There's still a lot of significant updates that we have coming this week with the, debt ceiling possibly being raised or not. Again, we already know every single year this becomes a problem. Oh, the government shutdown's coming. We got to prepare for this. Even though every single time, guess what we see? The debt ceiling gets raised. We start to see money being printed. Now, the question is, are we going to see money being printed this time with all of the, moves being made against, the government and these governmental audits, things like that? A lot of people are questioning it. Again, I don't read too far into it. There's a lot of noise that we can kind of counteract, if you will, and just kind of focus on the facts. In my opinion, the debt ceiling will be raised. We will avoid a government shutdown. I will be very surprised if, we do have a shutdown. If we do, then we will analyze the market and see what happens. But I think that we avoid it. But outside of that, I do think that the market could soon bounce back in a big way. And it's because of what I am seeing now across the board for even stocks. And I'm going to get to that here in a second. But the big thing with XRP that I'm really kind of looking at, and I think everyone should pay attention to this. So when we look at XRP, it's still in a downtrend going off of the actual daily candle closes that started back here in February. So this is what XRP's downtrend currently looks like on the chart. Again, I want to see us maintain some higher lows here. I do not want to see us lose these previous lows. I do not even want to see a candle close below $2.01. So $2 must be protected on XRP. We're going to focus on that again throughout the week. The big determining factor if XRP does create a lower low is going to be Bitcoin and what Bitcoin does next. Bitcoin has been climbing since the previous low, which did happen again today, yesterday. This is what the low looks like. We wicked all the way down to about roughly 76.6K. And we are still maintaining this macro, trend line going all the way back here, to 2024, the beginning of 2024. The big question is, could we count on this continuing to hold if we continue to see bearish news happening around tariffs and, we start to see everyone panicking about the government shutdown? Again, things could get a lot worse before they get a lot better. That's just facts. We've seen it many times over in the past. I remember when Luna collapsed, everyone thought that was the bear market low. They were like, all right, there's no way we can go lower from here, right? And then all of a sudden FTX happened. And everyone still wanted lower, by the way. Everyone was talking about Coinbase and Binance imploding as well. And it's just kind of crazy to see that when the market is already peak bearish. Now, right now, if we really look at the fear and greed index, we've been in extreme fear now for quite some time. I mean, for the last couple of days, this is the last 30 days, right? So we've just been hanging out around extreme fear since going all the way back to the end of February. So, we've been in here for almost like 2 weeks now, which is kind of crazy. But people still want lower price action. I mean, there's some people out there that do not want to see lower price action at all. But, there's still a lot of people betting on, us going even lower. The problem is that if you keep betting on us going lower and lower and lower and getting greedy with entries, guess what? You also risk the fact of, all right, well, I don't care about the bull run. I want the bear market now, because that's exactly what ends up happening if we continue to keep wanting lower and lower and lower price action. The big thing that I'm really kind of focused on here when it comes to Bitcoin is I want to avoid this, but there is a possibility that we, wick back down to the previous highs, right? We take liquidity completely. We wick all the way down here. We chop a little bit. We lose this trend line. Peak fear, by the way. This would be peak fear. Everyone will say it's over, it's done, it's completely finished. We'll break to the upside, retest that trend line, probably reject off of it, find some support somewhere around like maybe the previous highs. Like, so we're really kind of looking at like 74K or so. And this will last for probably a few weeks. Again, that would make sense with the tariff discussions happening and stuff like that. But we have to take it one day at a time. Again, I would like for us to actually avoid this. I would like for us to maintain this trend line, kind of just chop and trade against it, while we kind of chop in an upside. It's kind of like an uptrend essentially. And the thing that I'm really looking at is just structure wise. So I don't really care about us, just chopping here, as long as the structure kind of forms a bullish move here. So what I'm really looking at is us taking out some of these highs. So ultimately, we want to take out 87.4K. And then after that, we really kind of look at some of the previous wicks. So we want to take out $95,000, and then we really target the 100K area. When we're over $100,000, that's when we could be bullish again, because again, that means that we are going to retarget those previous highs. But until we actually clear out some of these previous highs, we start to trade in a very bullish momentum sort of pattern where, we are seeing those significant impulsive moves, just like back here, right? During the election, the beginning of, the election towards the winner, right? We know Trump won. That whole week was massive. And we started to see a big impulsive move across the board for crypto and for even stocks. The big thing to focus on there, though, was the structure. Because even though everyone was bearish into, August and even September, you started to see some bullish structure. You started to see higher lows. You started to see higher highs. We didn't get a higher high on the 3-day until the end of October. This is when everyone should have been bullish on crypto, which, by the way, we were, because we started to see the bullish structure form. We also started to see that uptrend form yet again. And then guess what? It took a little bit of, time for this to actually realize in, but we started to see those big impulsive moves. Again, that's what I'm focused on here. I want to see us, create bullish structure on this chart again. I want to see higher lows and I want to see higher highs. So if this is the bottom, if we're, saying, all right, well, that's it. This is the bottom. We want to see these lows maintained, and we want to see that uptrend form here. And we want to start to see, some moves just like we saw back in September. Again, this will take some time to realize in. I'll keep you guys posted on what Bitcoin does next, but everyone is now focused on stocks. And what's crazy about stocks is the S&P 500 on this trend line going all the way back here to April of 2024. We are now at that big point where it's either bounce or death for the S&P. I mean, we really want to start to see some nice impulsive moves across the board when it comes to stocks as well. Even the Dow Jones. The Dow Jones could have a little bit more pain left in it before we actually retest this trend line. I'm totally fine with it. Again, as long as we start to see those impulsive moves. And again, we look at the same thing with Bitcoin. We want to see bullish structure formed. Same with the NASDAQ. NASDAQ is basically at make or break levels, similar to the S&P 500. Could these go lower, though? If they lose these trend lines, could they just go lower before they, have a strong impulsive move to the upside? Technically speaking, they could, but this would signal a much larger move to the downside across the board for even risk on assets like, for an example, crypto. So we do not want to see the structure completely break. We want to maintain macro higher lows. That way we could start to see, higher highs. And again, we're talking about all-time highs being broken on these charts when we are talking about higher highs. Now, there was a great post that I read from the Kobayashi letter that outlined a case for a short squeeze. This would be a monumental short squeeze. So since February 19th, the S&P 500 has erased $5 trillion in the most one-sided move since 2022 bear market. Total put value or volumes, option puts, have surged to a record 30 plus million contracts over the last 5 days. Is a short squeeze coming? Because again, now we have puts, which are exactly, what you think they are. It's shorts, right? This is now at record highs. And we're not talking about record highs in the last couple months. No, we're talking about record highs over the last decade. This is crazy. In just 14 trading days, the NASDAQ 100 has now fallen a whopping 12.5%. The S&P 500 was trading at all-time highs less than 3 weeks ago. The recent one-sided nature of the stock market's decline is rarely sustainable over the long term. We think the short trade is crowded. Take a look at institutional positioning in the lead up to this decline. Heading into 2025, hedge fund exposure to Magnificent Seven stocks fell to a 22-month low. We saw a colossal divergence between the NASDAQ 100 and fund positioning for the first time since the 2022 drop. Now take a look at hedge fund positioning in the S&P 500 as of today. Hedge funds have turned net positive on equities over the last week based on S&P 500 futures positioning. This is the first such occurrence since the lead up to the post-election rally in November of 2024, which is why, we are starting to see some signs of relief. Even today's sell-off across the board for stocks, it was actually pretty calm. It wasn't that crazy. It wasn't that significant, which is why we're really kind of looking at a potential rally off of the lows. Now we have, on top of this, extreme fears everywhere in the market. In stocks, the fear and greed index is now approaching March of 2020 levels. Just as the market was unable to sustain extreme greed levels, the market is also unable to sustain extreme fear. Sentiment is everything here. Furthermore, President Trump's post on Tesla was very telling last night. He said that he is going to buy a new Tesla today as a show of confidence and support for Elon Musk. This was Trump's first sign of support for the market as it crashes. Market sentiment has deteriorated because of Trump's apparent willingness to weather a downturn. When asked if he sees a recession this year, he said that I would hate to predict something like that. He says it will be great, but knows there will be short-term pain. Trump's post on Tesla is the first sign of a potential reversal in sentiment, with tariffs, rising recession risk, rising inflation, slowing GDP growth, and a tech bear market all priced in. There are lots of potential bullish headlines. Could Trump soften his stance here? And I do think that we could. Listen, when we really think about what's happening here, crypto is a big area of focus, obviously, but so is stocks. I feel like we're kind of getting to that point where the fear is definitely outrageous. We're at extreme fear levels, and I do think that this will lead to extreme greed levels. Again, we just have to kind of weather the storm. And we have here, crypto is also another key leading indicator here. Last year, crypto saw extreme greed levels of 92 plus. It's now at a polar opposite of 17. Sentiment is the ultimate driver of price in any market, regardless of fundamentals. Today, both tech and crypto are outperforming. Take a look at tech and crypto at the open today. Mag 7 names are up 3% plus across the board, and Bitcoin is back above 80K. This is the first day with strong outperformance in big tech and crypto since February 19th. Many of these tech names are down 30+%. This is a key point. Many of the large cap technology stocks that lead the stock market are well beyond bear market territory. Nvidia is down nearly 30% from its all-time high, and Tesla is down 50%. Google and Microsoft are both down nearly 20%, and Apple is down 15%. Again, these are massive tech stocks, and when we think about these stocks reflecting over 33% of the S&P 500, everyone is expecting bear market because of all of the fear, right? Like we have all these fearful, headlines coming. We have global tariffs priced in, recession prices. Like this is sum it all up, and you have global tariffs priced in, recession fears priced in, extreme fear in stocks and crypto, polarized short positioning, Mag 7 stocks well beyond bear market territory, potential reversal in Trump sentiment. Something must give soon. So it's either at this point in time, okay, when we think about what's going on here, I feel like we are about to see significant relief across the board. And it would make sense when we look at the overall charts. Everything is telling us that things are still holding up. It might not be looking the best, but at least you could still see a little bit of support there. I'm focused on this entire week because, again, every single headline that I've been, looking at is fearful. Sentiment is at extreme fearful levels. I think that we are about to witness a very, very big relief rally. And the big question is that going to be just a dead cat bounce, or are we actually going to rally above the previous highs? And that's what we want to look at. That's going to be the warning sign, right? Is when we start to see a rally, we want to take out previous highs. On Bitcoin, for example, we want to go to 110K, right? Like that's the big thing on Bitcoin. On XRP, we want to break over $3.40. On the S&P 500, the Dow Jones, the NASDAQ, we want to break over those previous highs. If we do that, there you have the bull run. There you have the alt season, right? Like that's where we start to see all of that, morph into reality. But we have to get through the storm first, and we have to start to see some bullish price action. We want to see the structure form extremely bullish. We want to break over the previous highs, and I'm talking about on the lower time frame structure. So we're talking about like 87.4K, then we have to break over 95K, and then we could really kind of look at some of these higher targets. Until then, just be calm, be patient, and just relax a little bit. I know it's very easy to flip extreme bearish right now, but just be patient because we've gotten through worse times than this. So with that being said, I hope you guys enjoyed this video. If you guys definitely leave a like, subscribe, set notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.